Hello fellow traders and welcome back to my channel. Today I'm going to do a deep dive in how to choose the right account size. Most of the prop firms out there have 50Ks or 100Ks or 150Ks with different rules and policies out there. In my opinion, the $50,000 or something like that is only a name, because in reality we are going to look at the size of the drawdown and the size of the contracts we are able to trade. So that's the main point. But first things first, the evaluation rules are secondary in my opinion, because you have to look at, in my example, I use Tradeify. You have to look at the accounts they offer. These are the growth accounts. They have the trailing max drawdown with end of day. And here I only differentiate between end of day and intraday, or there are a couple out there with fixed drawdown. And the evaluation is one part of the trading that most of the time I think we will skip as fast as possible, because the goal is going for the funded sim and funded stage. But nevertheless, for choosing the right size, you have to understand, first of all, what's the price. And in my opinion, don't look at the prices here. You get Tradeify with a big discount if you take the link down in my description. And normally you only pay around 50%. So you calculate it for the drawdown size you get. So we get around $45 per $1,000 drawdown, compared to the 100K account and 150K account. A little bit more expensive and a little bit cheaper, but nearly the same. And another thing I'm looking at is the risk to reward ratio, because as in trading, when you put a trade, or when you open a trade, you always look to how many or how much I'm risking to how much I'm trying to gain. And if the profit target is $3,000 and I have a drawdown of $2,000, I personally like to calculate a risk factor here, and we can again look at the numbers, and the numbers tell us that the smaller accounts are easier to achieve. Here with Tradeify, again, they are nearly similar, but there are a couple of companies out there where the similarities are not so narrow band. They are much wider. But as I said before, as time is money, the evaluation should only be a fast step in the program to get the funded trader to earn money. So more important, in my opinion, are the payout policies. As you can see, I haven't written down funded stage rules or something like that, because in the payout policies, there are all rules you need to know. The payout policies tell you what rules and policies you need to adhere to get paid. And mainly here you can differentiate between, is there consistency, are there min trading days, are there min winning days. Again, with the example from Tradeify, here you have to do 5 traded days with the minimum profit, depending on the size of the account you've chosen. The next big part is, what's the minimum buffer, the safety net, as a couple of companies like Apex Funded Trader names it, or the profit goal for the second step for the payout is. And most of the time it's the same amount to achieve as you have a drawdown. So the drawdown here is $2,000 and you need to achieve $2,000 $100 minimum balance for a payout. There are a couple of differences here because other companies doesn't allow you to pay into the buffer zone. You have to earn $52,600 to be able to pay out $500. Here with Tradeify, you can go below the buffer with the payout, but for the next payout, you again need the minimum balance. Lastly, there are the min and max payouts. The companies have rules around what's the minimum payout. I think mostly dependent because they have to pay some fees, or on the other hand, there are companies out there, they have a minimum payout of $1,000. So that again is something like a safety buffer because you have to achieve the 1K over the buffer to be able to pay out. You can see here for Tradeify, they have different payout amounts for the account sizes. That's the minimum and a maximum. You can sum them up to get the main rules. For example, the 50K account, you have 5 times $150, a minimum of $500, and you need to have some drawdown left. That's the buffer of the $100, and you have a max payout, the first payout of $1,500. And then it's for the second payout, it's growing slightly. One thing you can add up here is the sum of max payouts. So you are able to see the differences between the 50K and 100K are slightly large, but then the step between the 100K and the 150K account is smaller. Depending on that, you always let you get paid the maximum amount. Because in my personal opinion, if you look into the future, if you can plan ahead, you can plan to always pay out the maximum, but in reality, I think the first payout will be nearly the minimum because you not only have to win the amount you want to get paid, you also need to have a buffer and you need to build the buffer because the saddest thing is if you lose your funded account again. And the second thing is a lot of the companies, and again here in the example Tradeify, they have rules in place to put you into the live funded account. So 3 steps: evaluation, sim funded, and then to a real live account. And although the live account has nearly no rules then and max payout and so on, but if you choose an account for your prop trading journey, you need to be realistic. First goal, $500, here $1,000, here $1,500, and then beginning possible after the third payout or fourth payout, you can be transferred to a live account. So the max payouts doesn't matter so much. To sum it up, my conclusion here with Tradeify, what's the best account size to choose? First of all, the price for the drawdown, nearly the same. Maybe first and second place is the 150 and 50K account. But then if you look at my calculation of the evaluation risk, how easy it is to achieve your goal, here is the 50K account ahead. In second place is the 100K and third place the 150K account. For the payout, again, you can do the same calculation. How much money do I need to make to be able to get paid my first payout? Here it's really, really narrow, nearly no distinction between the 3 accounts. And then you need to think about the minimum and the maximum payout. As said on the slide before, think about building your buffer, think about your risk with the account, and differences in regards of the maximum payout. You can't sum it up until the last payout, because maybe you are going to a live account. So what's the right account size? I can't tell you. I can only tell you, in my opinion, the best one here is the 100k account or the 50k account. They are really narrow. Always depends on your trading style, on your risk awareness. If you are a trader who scalps for a couple of points with maximum contract size, you have to look at the max contracts you are able to use with the account. So that's also another main part. But in my personal opinion, I would choose the 100 or 50k account. Another thing is, because Tradeify was really narrow, just for comparison, if you look at Apex, you can see the different account sizes, again with the drawdown 1500, 25, 275, 3000, 5000, 6500, and here the risk to reward or risk to profit goal factor is really different, because the easiest would be the 25k account, the easiest to achieve, then the 50k and 75k, but the 100k you can skip over, and the 150k would be easier to achieve than the 100k. Again, this is only looking at the drawdown to profit goal ratio. You have to look at the payout rules. Minimum, maximum, safety net. Here, Apex is again with safety net is the drawdown, and big difference with the minimum, maximum payouts. What I'm allowed to pay out minimum, what I'm allowed to pay out maximum, and with Apex trading, the steps of the maximum allowed payout are smaller in comparison to the Tradeify on the slides before. Again, I only use Tradeify as an example for the different differences that you have to look out for. But in my opinion, Tradeify is a really good company. I will also choose them for my trading. And only a screenshot of the website, because other than the normal growth account with the trailing max end of date drawdown, you can choose the advanced accounts. The upfront cost is easier, is cheaper, but then you have to pay an activation fee compared to the growth accounts. And also they have straight to sim funded accounts, so you skip the evaluation phase altogether. That are things that aren't easily to compare, because everybody is a little bit different. Everybody likes different styles. Also, everybody has a different purse or war chest. Let's call it like that. And for example, if you are a risky trader in the evaluation phase and say, okay, I'm going I'm buying accounts left and right and trying maximum risk to reach sim funded as fast as, or you say, okay, I buy the growth accounts with a higher upfront cost compared to the advanced accounts, but then I don't have any activation fee, and my risk is in the middle ranges and trying to go this way to the sim funded. And lastly, higher prices for the straight to sim funded and with lower risk, because here you have lower consistency rules. I'm able to have a way with risk averse to go to a payout. That's all for me today. If you have any other questions regarding choosing the right size of your prop account, don't hesitate to write down in the comments. And don't forget to like, subscribe, and hit the notification bell for my insights into prop trading. Until next time, trade smart and stay consistent.